All right, good morning, everybody. My name is Dean Harris. I'm Vice President of CrestCore Realty. Welcome to the Investor's Guide to Memphis Real Estate Podcast. The podcast where we guide you through your real estate investment journey here in Memphis, Tennessee. As always, I'm joined by Douglas Skipworth. Douglas is our founder and principal broker of CrestCore Realty and CrestCore Property Management. You're also our largest management client here, so you're eating what
Eat
you
the cooking,
cook.
absolutely.
That's right. You can listen to our previous podcast, guys, on Spotify, iTunes, our YouTube channel, Facebook page. And if you have any questions about today's show, shoot me an email, dean@crestcore.com. Today's show, we're going to talk about the 2022 Q1 market update, kind of, and what we're seeing. I've had several requests over the last couple of weeks to do about market updates. What's going on? What's happening? The beginning of the year has settled down, or the dust from the holidays and coming into the new year. It's kind of settled a little bit. So I thought I was starting to get questions from clients about, what's going on. So I thought today's, would be a good idea to talk about a market update. I've got some information before we even get started. I've got some information I'm going to give you guys today from Chandler Reports.
Okay.
ChandlerReports.com is a website here in Memphis where they log and keep up with all transactions, not just MLS transactions, but off markets, whatever
public records,
whenever they change hands, it's
physical
here.
data on properties from appraisers. I mean, it's very in depth. It's more than you can get from the just public.
Right. And today we're going to try to do this. Yes. And today we're experimenting with some of our technology here. We're going to try to put a link up on the podcast here at the bottom where you can submit your email address, and I will email you all of this information that I got directly from Chandler Reports. So if it's any confusing today or whatever,
great.
I can send
great resource.
Data. Yeah, absolutely. So market update. What are you? I'm just going to start kind of bland here. Like, what are you seeing, Douglas? What's the overall perception of what's going on?
I like to kind of think, okay, where are we? Let's boil it down. Act now. We can talk about that, but like it's act now, because it is still, and we did this 6 months ago.
Yes.
And we were saying, hey, sell, like now is the time to sell.
Yes.
If you had been doing that over the past 6 months, you were making the right wise decision. Mm-hmm. It was also a good time to buy, right? Because it's like, if you're a buyer, rates are going up. They have gone up over the past 6 months, and they will continue to go up. So buy now, refinance, lock in long-term rates now, raise rents. If you're not raising rents, you need to be raising rents.
That's huge.
That's what's happening in the market. We've talked a lot about lines of credit and cash offers, because that's what's winning deals now. Now's a great time if you have a line of credit or working towards a line of credit to get your collateral value established, i.e. appraisals are very high now.
Yeah.
So go get your appraisals so you can get a bigger line of credit. If you're using a home equity line of credit, consider getting a rehome appraisal so that you can get the maximum value for your line of credit. So act now. It's still Econ 101.
Yeah. Supply
and demand.
Yeah.
There is 100% supply issue, and because of that, demand is I would say demand has increased over time and supply has decreased, and it is just the prices have gone up out of the roof. Yeah, it's not.
We could go through a lot of these numbers, and I'll give just a few of these in some of the areas. But I'm just telling you, it's amazing to what we're seeing from a difference. I've got some first quarter numbers from 2021. And some first quarter numbers from 2022. I have every zip code here. Clearly, I'm not going to go through all these. Let's pick some of our more popular areas. Let's do 38128. Let me give them. That's
Raleigh.
Yeah. So first quarter of 2021, which was last year, we had 175 transactions.
Okay.
1,400 square feet was the average. $91,000 was the average sales price. Okay. First quarter in 2022.
I would guess similar number to the 175, not
203.
Yeah, not terribly different.
Average square feet.
Same, 1,400.
1491.
Okay, a little bit bigger.
Now here's
where it's gone. So what? Let's say it was 91. I haven't looked. It's got to be 110.
122, 103.
Oh, yeah.
In Raleigh.
In a year. From 90 to 122, if I do the math right, that's 33%.
If you were listening to the podcast a year ago and you heard me say, now is the time to buy or sell, and you reacted, you definitely saw that 30 grand bump.
You got the appreciation.
Yes.
Yeah. And that's where we were talking about the appraisals now are high because you've captured that equity. But appreciation.
That might be enough. You just won't stop the show now. I mean,
well done for your clients who bought
during that time. All right, so let's go from, that's Raleigh, a very popular area. Let's do Bartlett. Let's do the 38134 zip code in Bartlett. It seems to have the most activity. In 2021 Q1, we had 148 sales, 1,700. Yep, 1,700 square feet average, 164,754. Was the average sales price in Bartlett, 38134 in 2021 Q1.
Gotcha. And it's going to be similar number of sales, similar square footage, and the price is going to be a lot higher.
Exact. We had 100 in Q1 of 2022 this year, 150 sales.
Okay. Just
1,752 square feet.
Same.
205.9.
205. So 40 over 160 is in 25%.
$40,000.
Yeah. Another 25% increase. So appreciation, and they've always said Memphis isn't an appreciation market.
We've hit it for the last 4 or 5 years, man. This is
the demand's been crazy, and the supply. And we've talked about this before, but if you go back to MAR, the Memphis Area Association of Realtors, where they track inventory, because they track the MLS, 75-80% of everything that's sold is going through the MLS. So they got a good handle on what is available.
Yes.
In 15 years ago, it was the high of the last 15 years. It was 15 years ago. It was the high. 12,000 properties for sale in 2007.
12,000.
12,000.
Let me guess now. I bet there's 2,200 for sale now.
We ended the year at 2,165.
Dang,
yep. And now, and as of March, 1,900. So it's down 300. Over the past 3 months. So inventory over the past, few years, the graph has just gone, as far as inventory.
From? I had a guy ask me this morning, what do you think it's from? The inventory shortage.
I think that's great. That's good.
I know where it come from.
What do you think? Buyers?
There's more investor buyers.
Investor. Yeah, that's what
I don't care if they're investors or not. There's more buyers than we have enough.
Yeah.
The banks are still probably have a little scar tissue from 2008. Yep. So lending for developing and builders or whatever hasn't been as fast as it used to.
New home construction has been outpaced by the demand.
Yeah.
So they haven't made up the supply issue. Similarly, every now and then houses get taken out of the housing supply.
Yes.
Something gets a fire and they bulldoze it. Something blights in a neighborhood. It's beyond repair.
Yeah.
So anyway, yes, I agree. The demand and the supply, and you mentioned it, over that same period of time where that inventory has decreased, the average sales price, the median sales price, not just the average, this is like the one in the middle.
Yeah.
If you go back to statistics 101, so it's kind of taking out all the really expensive stuff and saying, hey, of all the prices, the median right in the middle was $99,000 15 years ago.
I bet it's 185 to 215.
At the end of 2020, it was that. Now at the end of 2021, it was 205. It's over 200 in Memphis. I mean, it's hard to believe that the average. The middle house in Memphis is over $200,000.
I still think that's low.
Nationally, it is low.
I still think that's low, and that's why I keep telling people there is room to grow here still.
For sure.
With an appreciation in the cash flow. Had another guy tell me this for a market update, and this is a very bright investor that I have. He is 26. He's a trader in New York.
Yeah.
Graduated from Harvard.
Okay.
He owns several in Nashville.
Okay.
And he's only 2 years out of school, I think. But he's already doing this kind of stuff. Like, I'm super envious. When I was 26, I wasn't doing this. So kudos to first. We talked about that for 10 minutes. I couldn't pat the guy on the back enough, and I don't even really know him. He had a great outlook on this, and this will help for all of this that we're giving you today. He said, Dean, when you buy your rentals right now, he said, you know, do you buy for the now? I was like, yes and no.
Yeah, sure.
No, really.
Yeah, a little bit of cash flow. A little bit.
I want to make sure that. He goes, I don't. He goes, I'm not buying. He goes, I own 6 or 7. He goes, and they're all over 250,000. He goes, I'm barely cash flowing any of them. Some of them is even a negative $100. And I'm like, man, he goes, Dean, if you just take a very bare minimum of 3% rental increase every year, that's just the national kind of average, a very bland, basic number. He goes, in 10 years, that $1,000 rental is going to be a $1,300 rental, or my $2,500 rental is going to be a $3,200 rental. He said, does it make sense then? I go, of course. He goes, I got a fixed cost on my house. He goes, the insurance might go up a little. My rate on my loan or some might be affected just a little bit. But if I have the 30-year fixed on it, then that doesn't change. My property taxes might
barely.
It's not going to be affected. His point was, you got a fixed cost on your product for the most part,
pretty much.
And your rent is going to do nothing but continue to rise along with your value.
And the only thing, and that's right. That's 100% right. Yeah. And we have seen that. The only thing I would caution against, but he's got the right time frame.
Right.
Over the long term, I believe that rent rate will increase. Now, it might be lumpy. And by lumpy, I mean, it might not be that smooth 3% every year. Right. It might be 0, 0, 0, 0, 20, 0, 0,
for sure,
10 to get to 30. And we've seen that where rates, especially if you have a tenant a renter who moved in there, stayed for 5 years, let's say at $800, and then you look up now in situations, and now you're raising it to $1,200. That's a 50% increase over that 5-year period.
I have 3 coming up in May.
Yep.
I got 125, 150, and 100.
Increase.
I think that's 375.
Yes.
That's about $4,500 more this year I'm going to make from 3 email responses.
Right.
So if you're not actively doing that to help,
raising
to that
rents.
guy's point, if you don't actively take care of your portfolio and make sure that you take those rent increases, it wasn't much. It's like $100. I was like, hey, take it. Yes, of course. Raise the rent on it. I mean, it is. They can't go down the street. Keep this in mind too, and this is a little off. If your tenants balk and they don't want to sign, that's okay. Tell them to go down the street and look for what's for rent.
Yeah.
They'll be right back and they'll sign your lease.
Yeah.
They'll
and
be right back.
And this is good advice, and you're providing this. This is what the show's about. Is like you got to be attuned to when to take advantage of opportunities. And we're saying right now, today, hey, sell now if you can, buy now if you can, lock in fixed rates if you can. Also, that advice of like, hey, if you hadn't been doing it over the past year, now is the time to raise rents. The market can handle it. The market, it is there for the taking, and to get the rent that, just like that guy had mentioned about that 3%, because you might not. It was a lot harder to do it 5 years ago. The last 2 years have been great.
Been great,
and it looks like it will happen with this inflation. And interest rates coming, like you can still pass that cost on. That's the beauty of rental real estate, is you can pass on those costs to the renter.
Your tenant that was making $13 an hour is now making $23 an hour. I promise you.
Yes, we've always talked about that. That is that the rent rates are usually when 30 to 40. I think it's a third-ish of what you have to have to rent a property. Just as a rule of thumb, 33%, so a third. So whatever that monthly income is, where the rents skew towards, intend towards, so that as people are making more money, the rents will continue to rise. So we've seen that. We've seen that over the past 20 years, and our mentors saw that over the last 40 years. So this is why I invest here,
the consistency. Yes. Hey, I gave you 2 in North Memphis. Let me give you 2 in South Memphis, just so you can get an idea of different areas of the city. I'm going to go Whitehaven, 38116. Mm-hmm. In 2021 Q1, 106 sales, 1,700 square feet, 103,000 was the average price.
Okay.
In 2022 Q1, 126 sales.
Yeah, a little more.
1,700 square feet.
Same square footage.
135.6. It's about across the board. We're 25%.
Yeah.
So if you bought a year ago, I'm not going to sit here and tell you that it's going to be exactly the same next year. But if they hand me these numbers again next year and it's the same thing, I won't be shocked. I can't be shocked. It's the market's telling us that it's doing it. It's showing us on paper. Like, as much as I get a little passionate about this, because as much as I'm sitting here telling everybody, hey, it's great, come invest, this doesn't lie.
Data don't lie.
You ever heard basketball players say the ball don't lie?
Ball don't lie.
Ball don't lie. Neither does the data.
No, and again, it gets back to that what we're talking about with supply and demand is like the houses aren't plentiful to choose from, and the investors are clamoring over those, ourselves included. And hey, I always want to, like you mentioned on there, that I practice what I preach. I eat my own cooking, and I want to say that it's like, I used the brokerage to buy a property last week.
Yes.
Last week, bought a property.
Yeah.
And guess what we're doing today? Closing on a sale of a condo.
Of another one, that's right.
Of another one. So I am buying and selling right now. I have gone and got an appraisal on a line of credit because appraisals were high. I did that 2 months ago. Yeah. So I'm like, I am in here with everybody going through this and practicing what we preach and believing this stuff. So I
have bought 3 this year.
Good. Yes, because now's the time to buy.
I haven't sold anything because I'm still kind of building, but I've bought 3. Yeah.
Now was the time to sell. And what I didn't tell you, but as soon as that condo sells, guess what I'm going to do, Dean?
What's that?
I'm going to give you another one to list.
So see,
you're welcome.
Yes, thank you.
Yeah, you're welcome.
We should do this podcast more. So
that's right. Yeah, so you can get another listing because now is the time to sell properties that, for whatever reason, don't fit with your long-term vision.
All right, let me ask you this.
Yeah, man.
Our rates, we went above 5. I know we went above 5% for the first time in 10 years. That's the headline.
Oh yeah.
Is that gonna affect us? Is that gonna affect investors' sales, pricing? Tell me what you think that's coming, or what that rate hike is gonna do. It's
been telegraphed, so everybody knows it's coming, and it'll have an impact over time. But again, I think because it is being telegraphed and foretold such that people know what's coming, they know they've got a little bit more of a window because the rates are going to keep going up. They don't, if you don't do it today, you can do it tomorrow because you still got some time. So I don't, it's going to hurt. It's going to have an impact, but historically as well, this is still cheap money. It's still cheap money, man. And locking it in, it's crazy.
My dad told me years ago, I think the first house he bought was 14% interest rate or something.
Yeah.
13.
I was talking to my pops the other night and he was talking about, this was 40 years ago when he was paying the bank more than he was able to keep in a profit. Like his interest expense was more than his profit percentage, because he had to pay the bank 20% interest to run his business.
So I do think you're going to see some rate increase. And I do think it is going to affect, not today. I don't even think tomorrow, but as that thing slowly begins to trickle up, you're going to see some, effect on investors and their buying power.
Yep.
You're going to see some guys that already own properties on these, adjustable rates.
Get out of adjustable rates.
They're going to be affected by this pretty good. So, if you're that investor and you've got 4 houses and 3 of them are occupied and one of them's getting ready to go and you need $40,000 to rehab and you don't have it or whatever, and you're stuck in this situation, do not hesitate and wait and deal with this. And sell those properties, sell and regroup. Yeah. That ought to be our next podcast, is sell and regroup. It's okay to sell and regroup and restart.
You did it. Remember?
Yeah,
that you pushed reset, took a mulligan, and aren't you better for it?
Battlefield Drive,
and and remember when we reconnected? That's what you helped me do.
Yes,
because we had acquired way more than we needed, and stuff we didn't make sense.
Yeah,
and we purged all of that.
You should have.
It literally hundreds of properties that you helped us offload.
I took because on they didn't over 100 listings right away.
It didn't make sense, and so we needed to just unload and regroup.
So we've practiced what I'm just telling you. We've told it 10 times. I bought a house in Raleigh, mismanaged it, didn't do it right, terrible, sold it, and now I'm back to buying again. you've done the same thing. You just said that. So yeah, it's not too late to.
I don't like it. I'm not the kind of person, and you know this because you know me well. I don't like talking about stuff I don't know what I'm talking about.
Yes.
I don't. I'm not a good BSer. You know what I mean? It's like, so I can talk about stuff that I've actually done and that I'm actually doing. So that's why I love working with you on this podcast, because this is the stuff that I'm doing all day, every day, which is buying property, making decisions about buying and making decisions about selling, making decisions about financing, making decisions about managing those properties. Do you raise rents? What do you do with maintenance and rehab? So I absolutely love it, man. So rates are going to affect us. That's great. Be prepared. You know, I get this question a lot. Is it too late? Is it like, if you're the new guy and you're just starting to read about Memphis and you read that it's oversaturated, or you read that there's nothing here to buy or what have you, like, what is your response on timing? I mean, I know what I say, but your response on timing when you hear, is it the right time? Is it now for Memphis? Yeah, now is the time. Act now. It's especially, I love that comment you made earlier about, are you doing it for today, or are you doing it for 10 years ago? And we talked about this a few weeks ago when we had just a Memphis, why Memphis podcast. Because 10 years from now, Memphis is going to be in a even stronger place than it is today.
Big time.
10
years ago.
That's what we talked about 10 years ago and 20 years ago. It's in such a better place. And that we talked, we can, again, go back and check out the Why Memphis episode, because we talked a lot about the things that are happening government-wise, economically, socially, good stuff.
So all the positives about why Memphis are still they're applying today and
always now. Everybody's got challenges, but like the challenges aren't new challenges, right? So we've been dealing with them. So now we're getting all this positive that's moving, that's giving us a big tailwind. So yes, now it is not too late. It is absolutely not too late. Again, it wouldn't be too late. Guess what? I would not be buying a property last week.
No.
You wouldn't have bought three this. You wouldn't have bought three this year so far.
Yeah, what am I buying? I mean, like, you don't think I'm overpaying and I'm buying ridiculous just so I can get on this podcast and say I'm buying, right? No,
I know you wouldn't do that.
Me, and I'm not doing that. I love to be able to tell you exactly what I'm doing. Tennessee's a disclosure state. I'll even tell you what I bought. So I mean, you can see. You can see what we're doing, that we are actually practicing what we're preaching here. So be sure to either click on that link on this podcast, or if you have to email directly, I want to send you all this data. I got foreclosures that have gone up a little bit. You can see I've got, I mean, literally so much data from the areas that we tell you to buy. I'm really encouraged to give you this. All right. What can we expect? So we talked about the market, right? Our market's fantastic. It's going great. You're not going to hear anything super negative out of us. What can they expect? They meaning any buyer in this market. What can you expect when you come in here and you say, yes, I've decided on Memphis. I listened to Dean and Douglas.
Yeah, good.
What good or bad? I don't even really care if it's bad. What can a buyer expect?
I think specifically right now, as they're doing, especially on the buyer side, competition for offers. Yeah. The high, we've talked about this before, strongest offers, waive contingencies, cash offers, low inspections, escalation clauses, anything to make yourself more competitive. That's what you're gonna expect, that competition, because we talked about it before, supply and demand, and the supply is low and the demand is high. So how do you come out on top as a winner? So it might take you 10 times before you get the deal. That's okay. Yeah. You're bidding on the right house.
That's the key factor I said in this last. If you don't get discouraged, if there's 7 other offers on this property you're looking at, that's a great thing. You might, it's discouraging, but it's a great thing.
You're looking at the right one.
You're looking at the right property. You're picking properties that other investors are looking at. You're picking the right house, or the right market, or the right area, or whatever it is. You're doing the right thing. Don't get discouraged. Be encouraged by that. I actually, not only do I not you want to be discouraged, I want you to look at that as a good, positive thing, that you're doing your own research, you're listening to what I'm telling you to do, and you're looking at the right properties. So don't get upset. I got a guy last week out of Sacramento, I think. I have 14 offers.
14 offers.
He got the 15th one.
Oh, congratulations. And that's what it takes.
I almost wanted to throw a party for him, because what did he do? He stayed the course.
Yep.
He did not expand his numbers to where he's not comfortable.
Good.
That's the biggest.
Don't
stay with that. Don't make 3 offers and say, "Oh, this isn't working. I need it." Stay with it in this market. His 15th one, he got it, and he couldn't be more thrilled. And he's going to go run through it. And he said, "Hey, man, as soon as I get the rehab started on this one, we're going to start it again. Hopefully, we can go before 15." So don't come in the market thinking I'm gonna hook up with Dean. We're gonna make 2 offers and we're gonna get 2 houses. It could happen. But it isn't going to.
This
it's
market,
not likely.
that's tough. That's tough.
Creative offers are winning.
Okay. Yep.
So creative offers, like you mentioned, cash and escalation clauses. But think about this too. We've got a lot of buyers barking at sellers. Bunch of dogs on the fence, on the curb, at the chain link fence. We're barking at you in your house. Take it easy on these sellers. I will say that.
Okay.
If they need a few days to get out, give them a few days to get out.
Oh, yeah. I heard a story about somebody. They won the bid and the seller needed to stay for a couple of days and they walked away. They canceled the contract.
It was my buyer.
Just be patient. This is a seller's market. You're going to have to make 15 more offers before you get that opportunity again.
So let's think about this. Let's say they list it for 200 and they sell it for 215. They're already winning. The seller is.
Yes.
Right. Why don't you they're winning with every offer. They got 6 of them. They're all over list. Every one of them are winning, right?
Yeah.
So here's where this is good. I'm glad we got into this. 6 offers. The seller's winning no matter what. I'm winning with yours because it's more than what I wanted. So that's off the table. The more part. Now let's look at the terms.
Yep.
What are you, FHA, cash? Okay. Now cash. Now there's down to 3. You're going to let me stay a week. You have to have me out at closing. You want me to rent it for a week. Guess who wins?
Yeah.
7 free days in the house. I lost a deal this week, over $250K. It was a $300 and something $1,000 deal because the buyer did not want to let the person stay there for 5 days. Everybody hearing that?
Wow.
Lost out on a property because you didn't want to let them stay there for now. If this is an owner occupant, you got to understand the market and who's your seller.
Oh, good point. Yeah.
Okay. The owner occupant's going to get out of the house, guys.
Yeah.
They got another house to buy. They're moving. If you got a tenant in there, I understand the hesitation. I understand that process. Yeah. If you have an owner occupant in that home, they're moving to another one, fella. They're not staying in this house, right? They're going to somewhere else. That's not the idea. So be a little flexible. Understand that this seller is super stressed. They're going to look just like you are. Yeah. They would really like it if you would play ball with them to a certain extent. And to me, 5 days after closing for them to vacate the property for free is playing ball. Okay. Stay prepared. It was one of my notes here. Was stay prepared, Douglas. I mean, if you just heard me say about the guy writing 15 offers.
Yep.
I mean, that took a month. That took 6 weeks, right? Yeah. We didn't just write them up in 2 days. Well, make sure that your team all along the way knows what you're doing. Your lender, your banker, your insurance companies, management,
property
if you've already
management.
engaged.
Yep.
Let them know what you're doing. Hey, it's tough, but I'm here and I'm out there. I'm trying to make offers and get things done. Let's see. Anything else? I want to leave and I want to end today with I got to credit you with our kind of our theme for this, but buy now before things change.
Yes.
And
sell now before things change. And remember we said that 6 months ago and it's exactly right. It's the same thing because things are changing. Like in the last 6 months, we have seen rates have gone up.
Yes.
Rates are short-term rates are going up, which will affect the mortgage market, which will affect the investor market, lines of credit, all these things as you're borrowing money.
The ability
from banks.
to buy, the buying
Hard money
power.
lenders are charged more because they're having to pay more, but renters are paying more in rent. So values are going up. So it's still a good time to buy.
Yes.
But it's a good time to sell as well. It is a really good time to sell.
I definitely want to end with that. Buy now before things change and sell
now before things change. And I will get you that listing after the show.
That's awesome. All right, guys, look, I am hopefully we can get the tech part down. Alec has been a huge help with us. If you click on that link, leave me your email address. I'll send this all to you. That way you've got all this information. We just didn't have time to go over every single one of these today, but I'll be happy to send that to you. Thanks for joining today.
Good show.
I guess you're a permanent fixture here now.
Love it, man. Love to talk about this stuff. Like I said, this is what we're doing all day, every day. So it's happy to share that info with anybody who can benefit from it.
Thank you, guys. We're going to post the show later today. Dean at CrestCore.com if you have any questions. See you next time.